C. Expansion of international trade and the rise of financial capitalism. Introduction. The rise of financial capitalism is one of the most transformative developments in modern economic history, fundamentally reshaping global economic structures, political institutions, and societal norms. Rooted in the expansion of international trade, financial capitalism emerged as both a consequence and a catalyst of global economic integration from the early modern period through the industrial and post-industrial eras. This process was driven by a convergence of technological innovation, colonial expansion, the rise of market economies, and the institutionalization of finance. This essay explores the historical relationship between the expansion of international trade and the development of financial capitalism, analyzing the evolution of global trade networks, the emergence of financial institutions, the role of imperialism and industrialization, and the eventual dominance of finance over production in late modern capitalism. 1. Expansion of international trade. The early modern foundations, 1501–800. The age of exploration in the 15th and 16th centuries laid the groundwork for the first wave of global trade. European powers Portugal, Spain, the Netherlands, England, and France established maritime empires connecting Europe with the Americas, Africa, and Asia. Trade routes facilitated the exchange of precious metals, spices, sugar, textiles, and slaves, giving rise to the first truly global economy. Mercantilist policies emphasized the accumulation of gold and silver, which required favorable balances of trade. Colonies served as sources of raw materials and markets for manufactured goods, while chartered companies like the British East India Company and Dutch VOC were granted monopolistic privileges, combining trade, governance, and military power. The Industrial Revolution and Trade Expansion, 1800–1870. The Industrial Revolution drastically increased productive capacity and led to the mechanization of manufacturing. Britain, as the first industrialized nation, leveraged its technological lead to dominate global trade. The invention of the steam engine, railroads, and telegraph revolutionized transportation and communication, drastically reducing transaction costs. During this period, global trade volume expanded rapidly. Raw materials such as cotton, coal, and rubber flowed from colonies to industrial centers, while finished goods were exported worldwide. The liberalization of trade under British-led free trade ideology culminated in policies like the repeal of the Corn Laws and the signing of trade agreements such as the Cobden-Chevalier Treaty, 1860, reducing tariffs and encouraging cross-border commerce. 2. Emergence and institutionalization of financial capitalism. Early financial institutions and credit markets. Parallel to trade expansion, financial institutions evolved to support increasingly complex transactions. The Amsterdam Stock Exchange, 1602, the Bank of England, 1694, and the development of joint stock companies marked the institutional birth of modern finance. Bills of exchange, insurance mechanisms, and credit instruments allowed merchants to navigate risk and uncertainty. These developments laid the groundwork for financial capitalism, an economic system in which financial institutions, markets, and motives play a dominant role in directing investment, distributing wealth, and influencing policy. The Gold Standard and International Finance, 1870–1914. The late 19th century is often described as the first era of financial globalization. Anchored by the international gold standard, currencies were stabilized, facilitating predictable international payments. Capital markets in London, Paris, Berlin, and New York flourished, financing infrastructure projects worldwide, including railways in Latin America, mines in Africa, and industrial expansion in Asia. This period saw the growing dominance of investment banks and multinational firms financial capital flowed increasingly independently from commodity trade, enabling speculative activities and shifting the locus of power from industrialists to financiers. 3. Imperialism, trade, and financial dominance. Finance and empire. The expansion of European empires was deeply intertwined with financial capitalism. Colonies provided resources, labor, and markets, while also absorbing surplus capital. British financial hegemony in the 19th century was underpinned by its naval power and its role as the world's banker. Sterling became the dominant reserve currency, and London was the epicenter of global finance. In colonies, financial institutions facilitated the extraction of wealth through debt, taxation, and investment in infrastructure that prioritized export-oriented economies. This created dependent economic structures in the global south, many of which persist today. B. Crisis and transformation. 1914–1945. The First World War disrupted international trade and finance, leading to the breakdown of the gold standard and the rise of protectionism. The interwar period witnessed significant economic instability, culminating in the Great Depression, 1929. The collapse of stock markets and banking systems exposed the fragility of global financial capitalism. This era also marked the rise of state intervention in economies. Keynesian economics gained influence, advocating for fiscal stimulus and regulation to mitigate market failures. The financial system underwent significant restructuring, especially in the United States, with the New Deal and the Glass-Steagall Act. 4. The post-war order and Bretton Woods system, rebuilding global trade and finance. After WT, global leaders sought to construct a stable international economic order. The Bretton Woods Conference 1944 established institutions such as the International Monetary Fund, IMF, and the World Bank to regulate global finance and provide reconstruction aid. The new system pegged currencies to the U.S. dollar, itself convertible to gold, fostering currency stability and enabling the expansion of international trade. The General Agreement on Tariffs and Trade, GATT, 1947, reduced trade barriers and laid the foundation for the World Trade Organization, WTO, the rise of multinational corporations and global finance. As trade liberalization accelerated, multinational corporations, MNCs, emerged as key players, with operations spanning continents. MNCs relied heavily on global capital markets for financing. The post-war economic boom, 1950–1973, was characterized by rapid growth in trade, investment, and industrial output. Financial capitalism resurged in the 1970s, with the collapse of the Bretton Woods system and the transition to floating exchange rates. Deregulation, liberalization, and the rise of offshore financial centers facilitated a new era of speculative finance, disconnected increasingly from productive investment. 5. Financial capitalism in the late 20th and early 21st centuries. The neoliberal turn. The 1980s and 1990s were marked by the rise of neoliberal economic policies, privatization, deregulation, and globalization of capital. The Washington Consensus promoted financial liberalization, which often led to capital flight, debt crises, and increased volatility in emerging markets. Financial markets became dominant arbiters of economic value. Stock buybacks, derivatives trading, and the securitization of assets became widespread. Global finance dwarfed trade in goods and services in terms of volume and influence. The 2008 global financial crisis and beyond. The 2008 crisis exposed the structural weaknesses of unregulated financial capitalism. The collapse of Lehman Brothers triggered a worldwide recession, leading to massive bailouts and a re-evaluation of financial governance. The crisis underscored the systemic risks posed by global finance and led to renewed calls for regulation and oversight. In the aftermath, central banks assumed unprecedented roles in monetary policy, and new forms of financial capitalism emerged, marked by fintech innovation, cryptocurrency, and algorithmic trading. However, inequality widened, and questions regarding the sustainability and ethical legitimacy of finance-led capitalism became central in public discourse. Conclusion: the expansion of international trade and the rise of financial capitalism are inseparable components of modern economic history. From early merchant empires to today's complex global financial systems, the logic of accumulation, risk, and capital mobility has shaped the contours of globalization. While financial capitalism has facilitated economic growth, innovation, and global integration, it has also generated instability, inequality, and crises. The challenge of the 21st century lies in reimagining a financial system that serves productive purposes, promotes equity, and addresses global challenges such as climate change, technological disruption, and socio-economic exclusion. As international trade continues to evolve with digital platforms, artificial intelligence, and geopolitical shifts, the future of financial capitalism will depend on the balance between market freedom and regulatory frameworks that ensure long-term stability and shared prosperity.